go on to the management of Raymond. We have Mr. Amit Agarwal, who's a Group CFO of the company, joining us on the show. Very good morning to you, sir. Thank you so much for joining us on ET Now. And let me actually talk about what your plans are going ahead. You're planning to roll out approximately 80 ethnic wear stores under the brand Ethnics by the end of FY23. Could you tell us what are the demand trends that you're witnessing in Q4, given that there are still a lot more wedding dates in Q4 this time around? And also, if you could tell us, will Q4 will indeed be better than Q3?
So if you look at it, I don't want to be giving any guidance in terms of saying whether this will be better or worse. However, I can tell you that you are absolutely right in terms of saying that there has been a significant, or there will be a significant number of wedding dates in this quarter, which enables us with the reach which we have created and we continue to create for our Ethnics brand, that we are getting a very good traction because of the design, the kind of products which we put in place, the kind of fabric. So I think we are seeing a very good demand for our Ethnics product. And it is a beginning, so it will take time to get to a very strong revenue with a large collection. So progressively, and during this whole year, we have opened almost 49 stores across all our formats. And even in the last quarter, we opened 24 stores. So I think we are quite bullish in terms of having the store expansion. And looking on this, we are able to cater to the markets for the demand which is going to be out there. And it is not just limited to this quarter that the weddings are strong. Even spilling over to the April, May, June, we are seeing also the wedding number of days are quite strong.
Good morning, Mr. Agarwal. This is Vinny joining in as well. And I want to talk about cotton prices. They have corrected. Freight cost, that has cooled down recently as well. But we're not seeing that impact actually coming in and trickling down on the margins in terms of improvement in margins. So how many quarters do you think it will still take for the margins to actually reflect the benefits of these lower costs? And by when do you plan to achieve the targeted 17 to 18% on margins that you have given?
So if you look at it in terms of a margin, if you see in our branded textile, which continues to be very, very strong, where we deliver more than 20% margins. And if you see in the apparel business, once again, if you see, we have been consistently improving and we have reached to a double digit with 11% plus margin, which is again a very healthy margin. Even in the garmenting business, which is export led, we have improved our margins. So if I look at across our businesses, we are seeing the margin. However, if you see the cotton price impact, we are into the retail business, in the branded retail business. So you don't see the correlation happening from today to tomorrow, because what happens is consistently we have been able to consider a price increase, and it is largely driven on the retail market demand, because I don't want to just go unnecessarily and create a significant increase in the price of our products, which will prohibit the volume. So therefore we manage this very tactically so that we maintain a growth in the revenue, and that is what we have been doing. And if you see, our margins have been doing well. Only thing is in the B2B shirting, which is where you have to see the going up in the cotton prices or going down in the cotton prices, you pass on quite quickly. And that is where you will see the change in the margin happening. Rest, all the businesses, our focus with our retail distribution and our cost efficiencies, OPEX cost management, we have been able to improve the margins.
Mr. Agarwal, now let's just talk about trade agreements and FTAs. Trade agreement with Australia came into force in December. We're seeing a meaningful progress coming in terms of the FTAs in UK and EU as well. So what is the market potential that you expect to be unlocked after these FTAs? And already with Australia, you're seeing the trade agreement.
Oh, this is phenomenal. We would have, today we are in a disadvantageous position compared to our neighboring countries because of the lack of the FTAs. Now, once that becomes available, we have the skill set. You see, with the suits capacity which we have and the way we are expanding, we are going to be in the top 3 players in the world in terms of the suit capacities and delivering suits into the marketplace. So therefore, I'm seeing that it has a huge potential and brings us much more cost competitive compared to our neighboring countries, because today we have a disadvantage on that account. I think as a country, we should be able to easily double or triple the volumes over the next 5 to 7 years.
Okay. And in the past few years, when you look at it, the demand and supply for affordable housing has seen a dip coming in. But now with the PM Awas Yojana, the outlay being increased by over 66% to 79,000 crores. Do you see more developers move towards that affordable housing? And would you be looking at catering more to the space as well?
See, look, we believe, you see, the definition of an affordable housing as per the income tax has two restrictions. One is a 60 square meters and the other is a 45 lakhs. Our focus has been clearly in the MMR region, and you won't be able to buy anything for a 45 lakhs of rupees. So therefore, what we are talking about is an affordable luxury. And the true testimony for us is that we have been able to deliver 3 towers out of 10 towers in the phase one, 2 years ahead of RERA in the December, which itself is a demonstrated performance. Second thing, if we talk about our sales velocity, we have been able to do almost 75% of our total inventory of the phase one has been completely sold out. So therefore, I think if you give the right product, right configuration, right amenities at the right pricing, you will be able to sell. So we are not seeing any kind of sort of demand which is lower.
Also, so what about, you've already received the SEBI's nod for the IPO of your engineering business. That's JK Files back in February 2022. Earlier, you had mentioned that, you would go ahead with the IPO when the market conditions would stabilize. With February 2023 now upon us, can we expect the IPO announcement anytime soon? What's the outlook there?
So we continue to engage with the bankers, and there is obviously the possibility of extending the filing and doing some bit of a work in order to get it done. Because for us, the primary reason for doing this was an offer for sale to reduce the debt at the Raymond Limited. And if you look at our demonstrated performance, that we have been able to reduce our debt in this quarter once again substantially. So we are at a 930 crores, which is less than 1 to on a debt to EBITDA, zero 0.3 on a debt to equity. So to that extent, I don't want to come out an IPO where the valuation could be a challenge. So therefore, what we want to do is to look at the market and time it properly so that we get the right value for the business. And we continue to grow the business. As you know, that the domestic market, especially on the domestic car segment, automobile segment has been very, very strong. And we being one of the large players in the ring gear segment, we are benefiting clearly out of that.
Okay, Mr. Agarwal, thank you so much for joining in with us on ET Now, giving us an understanding how the demand trends are and in terms of the IPO for your engineering business as well.